All right, outside of retail, we have wrapped up earnings, right? All these financial reports are in, and also we've seen the nation's credit rating, that's got a downgrade, and now we're watching all of these Cold War salvos between Washington and Beijing. That's intensifying, and it all kind of recalls a paradoxical term coined by Joseph Schumpeter. You know it, creative destruction. We talk about it all the time. In fact, it's part of the essential thesis with capitalism being a perennial gale of creative destruction. When capitalism is done right, things get broken, right? New mousetraps push out old mousetraps. And, you know, over the years, more and more, I thought about that concept. There's another element, though, to it that I think really plays a major role, and that's self-destruction, right? The self-destruction is sort of the concept as it's old as humanity, and it's the way Sigmund Freud sort of put it to us. We all have these instincts. He broke them down into life drives and death drives. Now, here's the thing. Death drives, we're talking individuals have this, societies have it, organizations, and of course, country. And I think we're going to try to delve into that over and over in this show because I feel like our nation, particularly the government, has delved into this sort of death drive, and it's hurting us badly. I mean, think about it. Massive debt, even more so to finance the government. The fight to quell inflation probably ends up annihilating the economy. The surge in crude prices and gasoline prices. There's a reason for all of this, folks. I'm going to bring in now Bianco Research President Jim Bianco. Jim, before I start to ask you about some of the topics of the day, your thoughts on the role of self-destruction with respect to creative destruction. It seems like they go hand in hand to me.
Oh, yeah, they do. I mean, creative destruction, Joseph Schumpeter's famous line, it's probably the single most important thing in capitalism. It keeps our economy vibrant. It allows it to change. We all allow it to change. And when we stop doing that, then your economy really starts to run into trouble. Look no further than China. Their economy is suffering right now. And one of the biggest reasons it's suffering is they won't allow it to change because change is difficult. Change is hard. Change leads to uncertainty, and they don't want to see that. Well, you become left behind then, and that's your risk. Yeah,
and those controlled economies always run into that same problem over and over again. All right, let me ask you about this spike in bond yields, right? We're right about here, which is, you go back 2008. This is a key significant number. We get to 4.2, let's say 4.3 or higher. What is it telling you? What is the message of the bond market to you?
That the inflation story is not behind us, that we have probably got more worries to come with inflation, not 9% or 8% inflation, but maybe 3 or 4% inflation. And what might be behind that is this talk that the Fed is done and that the Fed is going to cut rates in 2024. The bond market might be hearing that as the Fed's no longer interested in fighting inflation. And if you're not interested in fighting inflation, I don't want to own your long-term bonds, and that's why you're seeing bond yields head higher.
To that point, I'll show the folks what you're talking about right now. This is sort of the gaming right now for the Federal Reserve. The next meeting, it's right now 90% chance they'll hike. They'll keep rates there. And then in March, the first rate cut. By the way, Goldman Sachs says they see a rate cut in March. I think J.P. Morgan sees one in the second half of the year. And then, of course, a series of rate cuts throughout next year. But you think this is actually making, so in an odd, perverse way, it actually is lifting rates to a point. But what I'm worried about is the 10-year yield and the 30-year yield continuing to take off, to, just getting this life going parabolic from where they are now.
Yeah, no, you should be worried about it because look at what it's doing to mortgage rates. Mortgage rates, the national average for a 30-year fixed rate mortgage went over 7.5%. 7.5% just in the last week. That's a 22-year high. And mortgage refinancings are at a generational low. Well, because rates are so high that nobody's going to refinance if your rate is going to be 7.5%. And so that's having a profound impact on the housing market. And one of the big things we're seeing with housing is the number of sales is way down because people are, what an upside down world we're in. You're locked into a 3 or 4% mortgage. Yeah. You don't want to give it up and buy a new house and have to get a 7.5 or 8% mortgage.
Yeah, it's nuts. And by the way, refis have also died. Hey, before I let you go, another area that I see our government self-destructing. The last major oil refinery in this country was built in 1977. Now all of a sudden we got these oil rigs. We got the oil rig count late last week. It's 525. It's down significantly. In fact, it's down 14 of the last 15 weeks. By the way, I will note they say we're going to still drill for a record amount of cubic oil this year. But when you start to see this, you just wonder, golly, It looks like we're set up for a major spike in crude oil, but that could be avoided, couldn't it?
Oh, of course it could be avoided. And that has always been the problem, is that throughout the history of us trying to control the oil industry, we won't build refineries here, but we will build them in the Caribbean, which is where they're building it. And then we will tanker the gasoline up to the United States. Well, in the Caribbean, their environmental rules are nothing like our environmental rules. So if we built them here, they'd be the cleanest, most efficient refineries. Instead, we build them in other countries, and we don't have any say over their environmental rules. We wind up making the whole situation worse. And yeah, what it resolves itself in with is more expensive gasoline, more expensive crude oil, and that seems to be where we're going. Price of crude oil is up 25% in the last 6 weeks.
Yeah, it's just so crazy. It's avoidable. That's the tough part. Jim, love these conversations, my man. Thank you very much. Appreciate it.
Thank you.
Hey, folks, later on.